Most people think traders with 10 years of experience have some secret indicator, a special strategy, or a way to predict every market move. They don't. In fact, if you watched a trader with more than a decade in the market sitting next to a beginner during a volatile trading day, the difference would shock you. When the market suddenly drops, beginners panic. Experienced traders get curious. When the market explodes upward, beginners feel excitement. Experienced traders start looking for risk. And when a trade goes against them, beginners ask, "How do I get my money back?" Experienced traders ask, "Did I follow my process?" That's the difference 10 years can make. The longer someone survives in the market, the less emotional their reactions become. Not because they don't care about money anymore, but because they've seen almost everything. They've seen crashes, rallies, fake breakouts, unexpected news, winning streaks, and painful losing streaks. They've learned that reacting emotionally is expensive. So in this video, we're going to break down exactly how traders with 10+ years of experience react to different market situations. You'll discover why they stay calm when others panic, why they don't celebrate every winning trade, why they don't chase opportunities, and why their focus is completely different from what most people expect. By the end, you'll start seeing the market through the eyes of someone who survived thousands of trades, years of uncertainty, and countless lessons that most traders learn the hard way. Let's get into it. 1. They observe first. One of the biggest differences between a beginner and a trader with more than 10 years of experience is what happens during the first few moments of a market move. When the market suddenly spikes up, many inexperienced traders feel pressure to act immediately. They start thinking they're about to miss an opportunity. Their attention shifts from analysis to emotion. They begin chasing price because they believe speed is more important than patience. Experienced traders react differently. They don't rush. They don't feel an urgent need to prove anything. They simply observe. After years of trading, they understand that the market will always provide another opportunity. Missing one trade is meaningless compared to protecting capital and maintaining consistency. That's why their first response is not action, it's observation. Imagine a stock, currency pair, or index suddenly making a strong move within a few minutes. Social media starts exploding with excitement. Everyone is talking about it. Charts are moving fast. A beginner sees a chance to make money. A veteran trader sees a question that needs answering. What's causing this move? Is it supported by volume? Is this a genuine breakout or an emotional reaction? Has the market shown this behavior before? Where are the risks? Instead of trying to predict immediately, they gather information. This habit comes from experience. After thousands of trades, they've learned that the market often rewards patience more than speed. They've seen countless situations where a move looked unstoppable, only to reverse minutes later. They've seen traders jump into positions based on excitement and then spend hours hoping the market saves them. That's why experienced traders rarely feel the need to be first. Their goal isn't to catch every move. Their goal is to catch high-quality opportunities. They know that forcing a trade is usually more expensive than missing one. This mindset creates a huge advantage. While others are reacting emotionally, experienced traders remain mentally detached. They understand that the market doesn't care about their opinions, expectations, or desires. The market will do what it wants regardless of what anyone believes. So instead of fighting the market, they study it. Instead of chasing price, they wait for confirmation. Instead of asking, "How much can I make?" they ask, "What is the market showing me right now?" And that simple shift in thinking is one of the reasons they've managed to survive for more than a decade in a game where most people don't last a few years. 2. Risk comes first. One thing that surprises many people about traders with 10+ years of experience is that they don't look at profit first. They look at risk. Before they think about how much money a trade can make, they want to know how much money it can lose. That may sound simple, but it completely changes how they approach the market. Most newer traders open a chart and immediately start imagining the reward. They see a potential breakout and begin calculating profits in their head. They picture the trade working perfectly before they've even considered what happens if they're wrong. Experienced traders do the opposite. The first question isn't, "How much can I make?" It's, "What happens if this fails?" That mindset comes from years of hard lessons. After spending a decade in the markets, traders realize that survival is the foundation of success. A great opportunity means nothing if poor risk management wipes out weeks or months of progress. That's why experienced traders don't get excited simply because a setup looks attractive. They examine the downside. Where is the stop loss? Does the potential reward justify the risk? How much of the account is exposed? Is this trade worth taking at all? Sometimes the answer is no. And they're perfectly comfortable with that. Many traders struggle because they believe they must always be involved in the market. Experienced traders know that staying out of a bad trade is often a winning decision. They understand something that takes years for many people to learn. Every trade carries uncertainty. No setup is guaranteed. No analysis is perfect. No trader wins all the time. Once that reality is accepted, protecting capital becomes more important than chasing gains. That's why veteran traders often appear calm even during periods of uncertainty. They aren't calm because they know what will happen next. They're calm because they've already planned for what happens if they're wrong. Their risk is defined. Their exposure is controlled. Their emotions are not tied to a single outcome. If the trade works, great. If it doesn't, they move on. There's no panic. No desperate adjustments. No emotional decision-making. Just another outcome in a long series of trades. Over time, this approach creates consistency. While others focus on making money today, experienced traders focus on making sure they're still in the game years from now. Because after 10 years in the market, they've learned a powerful truth. The traders who last the longest aren't usually the ones who make the most on a single trade. They're the ones who become experts at protecting what they've already earned. 3. Losses don't shock them. One of the clearest signs of an experienced trader is how they react when a trade loses money. Or more accurately, how little they react. For many beginners, a losing trade feels personal. It feels like proof that they were wrong, that their analysis failed, or that they somehow missed something obvious. A single loss can trigger frustration, self-doubt, and the urge to immediately make the money back. That's where a lot of damage begins. Because once emotions take control, discipline usually disappears. A trader who was following a plan suddenly starts changing rules. Stop losses get moved. Position sizes get larger. New trades are taken without proper confirmation. The focus shifts from following a process to recovering losses as quickly as possible. Experienced traders know this pattern very well. They've lived through it. They've made those mistakes before. And after years in the market, they've learned something that completely changes the way they think. Losses are normal. Not acceptable because they enjoy losing money. Acceptable because they understand it's part of the business. Think about any successful business in the world. Every business has expenses. Restaurants throw away food. Retail stores deal with damaged inventory. Manufacturers have production costs. Trading is no different. Losses are one of the costs of operating in the market. Veteran traders don't expect every trade to work. In fact, many profitable traders are wrong surprisingly often. What separates them from struggling traders is not avoiding losses, it's managing them. When a trade hits their stop loss, they don't immediately search for someone to blame. They don't blame the market. They don't blame the news. They don't blame manipulation. Instead, they ask a simple question. Did I follow my plan? If the answer is yes, the loss is easier to accept. Because they understand that even good decisions can produce bad outcomes. That's the nature of probabilities. A well-executed trade can still lose. A poorly executed trade can still win. Experienced traders judge themselves by the quality of their decisions, not by the result of a single trade. That's a huge mental shift. It allows them to stay objective when things don't go their way. Instead of becoming emotional after a loss, they review what happened, learn from it if necessary, and prepare for the next opportunity. No drama. No revenge trading. No panic. Just another trade in a career that may include thousands more. Because after 10 years in the market, they've realized something most people never fully understand. A loss is only dangerous when it changes the way you think. The money can be recovered. Discipline is much harder to get back once it's gone. 4. Winning doesn't excite them. Most people expect experienced traders to celebrate every winning trade. The reality is often the exact opposite. After 10 years in the market, many traders barely react to a win at all. That doesn't mean they don't appreciate making money. Of course they do. The difference is that they've learned not to become emotionally attached to winning. Beginners often treat every profitable trade as proof that they're doing everything right. A trade closes in profit, confidence skyrockets, and suddenly they feel unstoppable. That's where problems begin. Because confidence can quietly turn into overconfidence. A trader who just had 3 or 4 successful trades may start believing they can't be wrong. They begin increasing position sizes without proper planning. They take setups that don't fully meet their criteria. They stop respecting risk because recent success has convinced them they're seeing the market clearly. Experienced traders know this trap. In many cases, they've fallen into it before. They've learned that some of the biggest mistakes in trading happen immediately after a winning streak. Why? Because success can lower your guard. A loss usually makes traders cautious. A win often makes them careless. That's why veteran traders try to keep their emotions stable regardless of the outcome. When a trade wins, they don't automatically assume their analysis was brilliant. Sometimes the market simply moved in their favor. Sometimes the setup worked exactly as expected. Sometimes they were right. And sometimes they were just fortunate. They understand that one trade doesn't prove anything. Neither does 5 trades. Neither does 10. What matters is performance over a large sample size. That's how professionals think. They aren't focused on individual victories. They're focused on consistency. A winning trade is simply one piece of a much larger picture. This mindset also protects them from becoming addicted to the emotional highs of trading. Many people enter the market chasing excitement. They love the rush of seeing profits appear on the screen. Over time, they begin trading for the feeling instead of the opportunity. Experienced traders move away from that mentality. The more years they spend in the market, the more they value stability over excitement. Their goal isn't to feel something. Their goal is to execute. When a trade reaches target, they record the result, review the execution, and move forward. No victory lap. No emotional celebration. No belief that they've suddenly mastered the market. Because they know the market has a way of humbling anyone who becomes too comfortable. And after more than a decade of trading, they've learned a lesson that many people never forget once it happens to them. The moment you start feeling invincible is often the moment you become vulnerable. That's why experienced traders stay grounded, even when they're winning. 5. They trust the process. One of the biggest changes that happens after 10 years of trading is where confidence comes from. Beginners usually place their confidence in outcomes. If they win, they feel confident. If they lose, their confidence disappears. As a result, their emotions constantly rise and fall with every trade they take. Experienced traders operate differently. Their confidence is not built on individual results. It's built on their process. They understand that a single trade can never tell the full story. A good trade can lose. A bad trade can win. Judging yourself based on one outcome is like judging an entire book after reading one page. That's why veteran traders focus on execution instead of prediction. They know they cannot control what the market does next. They cannot control unexpected news. They cannot control sudden volatility. They cannot control the actions of millions of other market participants. What they can control is their process. They can control their preparation. They can control their risk management. They can control their discipline. They can control whether they follow their rules. And over time, they learn that those are the only things that truly matter. This creates a level of confidence that isn't easily shaken. Imagine 2 traders taking the exact same loss. The first trader immediately questions everything. Maybe the strategy stopped working. Maybe the market changed. Maybe they aren't good enough. One loss creates a chain reaction of doubt. The second trader reviews the trade and sees that every rule was followed correctly. The setup matched the plan. The risk was controlled. The execution was disciplined. The trade simply didn't work. So they move on. That's the difference. The first trader is emotionally attached to outcomes. The second trader is committed to the process. After years in the market, experienced traders realize that consistency doesn't come from finding a perfect strategy. It comes from repeatedly executing a solid strategy with discipline. That's not exciting. It's not glamorous. And it's certainly not what most people expect. But it's what keeps traders alive for years while others constantly jump from one system to another searching for a shortcut. Veteran traders have usually tested countless ideas, indicators, and strategies over the years. Eventually, they stop searching for magic solutions and start refining what already works. They become patient. They become systematic. And most importantly, they become consistent. Because they've learned a powerful truth. The market rewards discipline far more often than intelligence. You don't need to predict every move. You don't need to catch every opportunity. You simply need a process that gives you an edge and the discipline to follow it when emotions try to pull you away from it. And that's exactly what experienced traders have spent years developing. 6. They think long-term. If there's one trait that separates traders with 10+ years of experience from everyone else, it's this. They think in years, not days. Most people enter the market wanting immediate results. They want to double an account quickly. They want every trade to be a winner. They want proof that they're making progress right now. Experienced traders used to think that way too. Then the market taught them a different lesson. The market doesn't reward impatience. It rewards consistency. After years of analyzing charts, managing risk, and experiencing both success and failure, veteran traders see trading as a marathon rather than a sprint. A single day means very little. A single week means very little. Even a single month doesn't tell the full story. What matters is the long-term outcome of hundreds or even thousands of decisions. That's why experienced traders rarely become overly emotional about short-term results. A losing day doesn't convince them they're failing. A winning day doesn't convince them they've mastered the market. They know both outcomes are temporary. Instead of focusing on what happened today, they focus on whether they're improving over time. Are they becoming more disciplined? Are they managing risk better? Are they making higher quality decisions? Are they following their plan more consistently? These are the questions that matter. Because experienced traders understand that success is usually built through small improvements repeated over a long period of time. The public often sees trading as a battle against the market. Veteran traders see it differently. For them, the real challenge is managing themselves. Controlling emotions. Staying disciplined. Following a plan when fear appears. Following a plan when greed appears. Maintaining consistency when results fluctuate. Those skills don't develop in a few weeks. They take years. And that's exactly why traders with more than a decade of experience react differently than everyone else. They've learned that survival is an achievement. Patience is an advantage. Discipline is a competitive edge. And consistency is far more valuable than occasional brilliance. When the market becomes chaotic, they remain focused. When opportunities disappear, they stay patient. When results fluctuate, they trust the process they've built over time. Because they know something that only experience can truly teach. Trading success is not determined by what happens in your next trade. It's determined by what happens over your next 100. And that's why traders who last more than 10 years don't spend their energy trying to win every battle. They focus on winning the war. The longer you stay in the market, the more you realize that the goal was never to become rich overnight. The goal was to become the kind of trader who can consistently perform, adapt, and survive no matter what the market does next. And that's how traders with more than 10 years of experience react to the market. Not with panic. Not with excitement. Not with the need to be right every single time. They've learned that success in trading isn't about predicting every move. It's about managing risk, controlling emotions, trusting a proven process, and thinking far beyond today's results. The truth is, most of these lessons sound simple when you hear them. But living them is a completely different story. Anyone can stay disciplined when everything is going their way. The real challenge is staying disciplined after a loss. Anyone can be patient when the market is moving slowly. The real challenge is being patient when everyone else seems to be making money. And anyone can talk about risk management. The real challenge is respecting it when greed starts whispering in your ear. That's why experience is so valuable. Years in the market don't just teach people how to trade. They teach people how to think. If there's one thing to take away from this video, it's that the market rewards consistency far more than intensity. The traders who survive the longest aren't usually the most aggressive, the smartest, or the luckiest. They're the ones who keep showing up, keep learning, keep adapting, and keep following their process regardless of what happened yesterday. Now I'm curious about your experience. Which habit of experienced traders stood out the most to you? Was it staying calm during losses, focusing on risk first, trusting the process, or thinking long-term? Drop your answer in the comments below. I'd love to hear your thoughts and experiences. If you found value in this video, make sure to leave a like and share it with someone who's working on becoming a better trader. And if you're interested in more trading psychology, discipline, risk management, and real-world lessons from experienced traders, subscribe and join us for the next video. Thanks for watching, and I'll see you in the next one.